So today we'll try to complete our chapter number 11 and chapter number 10. Okay, let's try to finish it off as much as we can. If we can't, then I will provide you a recorded lecture for rest of the whatever we left today. Okay, but we'll try to complete it today only. So now let us first start with our chapter number 11 because it's quite simple, I would say, and we have you will get a related thing. We have studied this thing earlier as well. So chapter number 11 will be quite easy for you. Uh, okay, just remind me once on Telegram that thing. Okay, I'll provide you that. Screenshot of what? Chapter number 1. Okay. Provide. I'll provide you that. Okay, so let's start with our chapter number 11 first. Then we can discuss it out. In chapter number 11, there are 3 SAE. Now, can anyone tell me the full form of SAE? SE full form. Assurance engagement. Okay. It is standards on assurance engagement, which is not based on historical financial data. Okay, basically, which is not based on historical financial data. So we will learn about 3 SAEs. SAEs 3400, SAE 3402, and SAE 3420. Okay, first, it is the examination of prospective financial information. Now, what do you mean by prospective financial information? Till now, on which we have given the assurance, etc., on historical financial data, right? Historical financial information or financial statement, right? Now we are giving the examination on prospective financial information. Prospective means based on future. Now example would be there are many cases in which various companies etc. make their future future related financial information and go to the bank that see if we follow this particular sequence then we might get some profits etc. So please lend us some money. But banks do not give them loans directly because they wanted some assurance over this that okay how you have made this particular future financial information, okay how you have gained this particular information, what is the assumption based on it, right? Whether it is reasonable or not. So upon prospective financial information, they can go. They have prepared this financial information based on future data. Now, as bank is asking for assurance, they go to a CA, and now CA is providing an examination on this prospective financial information. So how will CA do this thing? This thing we will study in this particular SAE. Okay. Now already we have studied about service organization. Right. In the same way, I hope you remember what is service organization. Please tell me. So it is on the same way that okay, how we are providing assurance report on controls of the service organization. Very much similar to SE 405 in service organization that we have already covered. Almost similar to that. Now please tell me what do you mean by service organization. I hope you remember this one. Service organization, user entity, outsourcing entity, right? Someone for which we have outsourced our some of the uh, workings, maybe payrolls, right? Maybe recruitment, etc. So we have outsourced one of our working to this organization which is providing us some services. Okay, so it is known as service organization. Now we are providing an assurance request on the controls over the service organization. That okay, service organization is supposed handling our recruitment services. Okay, so but at last, who is responsible for the recruitment? Our user entity is responsible. So whether our service organization is following controls or not, having controls or not in their entity, right? So all these things we are providing assurance over the controls of the service organization that whether the controls are there in the service organization or not. So how to perform the assurance report that we are going to study in this particular SAE. Now, how to remember the name of this particular SAE? As we have learned SA 402, so only 3 can come in earlier. So this is how we can remember the name of this particular SAE. Okay, about the service organization. And then last SAE, now we can change like SA 420. Okay, we can change the numbering. And in this, we are providing assurance engagement to report on compilation of pro forma financial information included in the prospectus. Now, what do you mean by pro forma financial information? So, pro forma, one is a simple financial information which is based on historical data, and other one is pro forma financial information. In this particular financial information, we are like including some of the future events that is not yet occurred, or maybe any of the future financial reporting work that might be applicable to us in future. So in the prospectus, what we are doing, we are comparing our current data based on historical financial information and some based financial information based on some future events. So suppose that if we get some this loan, then how it will get reflected in our financial statement. So we are providing some pro forma financial information in our prospectus. So suppose we have got this much funds from this particular raise of amount. So how our financial information get changed? Okay, what it impacts us. Okay, all these things are included in the pro forma financial information that can be included in the prospectus. So now on this pro forma, something which is not yet occurred, right? Something based on future. So as a C, we are providing assurance over this kind of pro forma financial information that can be included in the prospectus. Okay, are you guys able to get the basic idea of all these SAEs? Yes, no, so that we can start. Okay, great. So now let us start. So first of all, traditionally a CA normally attests what? Normally it attests past events. But as it is growing, as CA functioning is growing now, they are also expected to audit the something future related financial information that is generally known as prospective financial statement. Okay. So for example, X Limited has given the consent to its board of directors to plan fundraising of prospective equity investment and asked your firm to report about the accuracy of profit forecast and a statement of future position of the entity of 5 years that could placed in front of the equity investor. So what you are doing, you are providing an accuracy over a report that is based on some prospective financial data that is based on the future events. So standard on assurance engagement, we are dealing with these essays already discussed. Now, first case, SAE, 3400 examination of prospective financial information. Now, it is not necessary that the CA who is providing assurance over our prospective financial information being the same as your statutory auditor. Okay, so it is not needed that both of these CAs are same. Okay. Now, what do you mean by prospective financial information? Financial information that is based on the assumption that events that may occur in the future, okay, or possible action by the entity, okay. If we get suppose this much amount of fund, that would be the action of the entity, how our financial statement will look. So based on the assumption or based on the action of the entity, they have prepared some prospective financial information. Now, it will be highly subjective thing and its preparation requires exercise of what? Exercise of judgment. It forms because of some forecast, projection, or combination of both. Because we are forecasting some future, we are projecting something that okay, we are getting 5% hike, so next year also we might get 5% hike. Okay, so it is based on the projection that okay, from the past year we are getting some projection and maybe forecast something that we have not done yet, but we are forecasting something. Okay, or it may be combination of both of these things. So how we will make prospective financial information by first of all, it requires various judgment, considerable amount of judgment. Then second thing, it might involve various kind of forecasted projection or maybe combination of both these things. Now, what is forecast? As I have told you, forecast means we are assuming the future events. That okay, we do not have any information till now, but we are assuming the future events which management expects to take place, like 5% increase in sales. And what is projection? Projection is hypothetical assumptions about any future events. Or it may be best estimate and hypothetical assumptions. Hypothetical assumptions mean something that is imagined, something that is suggested, that is not there, something hypothetical. We are assuming things, and on the basis of that, we are projecting some things. That okay, these things are expected to take place considering the major changes in the nature of operations, etc. So, a company plan to raise funds from prospective equity investor and ask the chartered accountant to examine the profit forecast for placing it before prospective equity investor. The example is already given there. The same example is being given here, and other examples are also being given here. So, how we will prepare prospective financial information? We are preparing prospective financial information based on the judgment of the management, and it is based on the projection and future projection and forecast, or maybe use of both of these things. Is it clear till here? Okay, great. Now, what is the scope of this particular essay? The purpose of this particular essay is to establish a standard and to provide guidance on engagement to examine and report on prospective financial information. It okay how we will examine this thing and how we will provide the report over it, including examination procedures, best estimate, and hypothetical assumptions. Essay does not apply on examination of prospective financial information expressed or general narrative terms, such as found in the management discussion analysis, but for the laid down principle and other standards of auditing issued by the Institute of Chartered Accountants India should be used by the auditor to the extent practicable in applying this SAEs. So it is not like basically that okay how we are assuring that this forecast is correct. So we are not only giving that okay, because it is given in the management discussion analysis, we are finding it okay. But no, we have to apply the standards that is given by the Institute of Chartered Accountants of India as practicable it is. The term auditor used in this particular thing is describing the services involved examination of prospective financial information. The references is not intended to apply the member performing such services necessarily need to be statutory auditor. The same thing is being repeated here that someone who is providing assurance over prospective financial information need not need to be the statutory auditor of the entity. Okay, so the person whosoever is providing assurance or not an who is doing the examination. I would not say assurance because assurance is not possible in future information, right? We are not able to perform a reasonable assurance over it. We can only do the examination. Okay, so whosoever is doing the examination over prospective financial information, then it is not that the same person can be the statutory auditor of the entity. Okay, so what is the nature of assurance? Opinion as to whether the result is shown in prospective financial information will be achieved cannot be expressed. As I've already told you that we cannot provide assurance over this, we are only providing opinion, and we can also not provide opinion that okay, even if assumptions, we should also mention that okay, if all things right, whether the assumption is correct or not, okay, whether the all the accounting assumptions that is being taken is correct or not. All these things we will do only examination. But even if our examination do not assure that okay, whatever result is being given in the respective financial information will be achieved. These things we cannot say in our report. Okay, that okay, whether the prospective financial information will be achieved, we cannot express this thing. Now, who is responsible for preparation and presentation of prospective financial information? Based on your understanding till now, please tell me who is responsible for the preparation and presentation of prospective financial information. Management, right? So management is responsible for preparation and presentation of prospective financial information. How will management do this? How will management prepare and present the prospective financial information? So first of all, the management will identify and disclose the prospective financial information, that okay, what things needs to be identified. Then they will explain the basis of the forecast. Suppose they have given that okay, there will be 5% increase in the sales. So on what basis they have done this particular forecast? Then they might do some assumptions, etc. So they also need to mention that okay, based on these things and based on these assumptions, we have identified this particular prospective financial information, right? So now, can professional accountant be associated with prospective financial information? So I hope you all guys remember that in our professional ethics chapter, we have learned that a CA cannot express its opinion or cannot give reasonable assurance on something that is related with forecast. I hope you remember there is something related to futuristic thing. It is given in the our professional ethics chapters in one of the clauses. Are you guys able to remember this one? Okay, in which schedule it is being mentioned if you remember? I'm not asking which clause, only which schedule. Is it related with schedule 1 or schedule 2? Schedule 2. So it is related with clause 3, schedule 2. Okay. Clause 3 of second schedule, it says that the professional accountant will be deemed to be guilty of professional misconduct. 1 second. Okay. Shall be deemed guilty of professional misconduct if he permit his name or his firm names to be used in connection with estimation of earning or some contingency. Okay. In the transaction or manner which lead to believe that he has vouches the accuracy of this forecast. So he cannot make his name or his firm's name to be used in relation with the accuracy. Okay, he has vouches the accuracy of this particular forecast. The above clause does not preclude a chartered accountant from associating his name for prospective financial information. A chartered accountant can practice in preparation of uh, profit or forecasted financial information, can review them, um, provide indicated clearly in his report that the sources of information basis on forecast and major assumptions, allowing so long as he does not vouches the accuracy. So main thing is here that he does not vouches the accuracy. He does not say that okay, this thing is 100% correct. I'm vouching this thing. I'm providing reasonable assurance. So all these things he cannot do, but chartered accountant can involve in preparation. He can involve in review of the same, and he can also provide report on the same. But report he should clearly mention that okay, what all the sources are there, what all the basis of forecast, and what is the major assumption he has taken while preparing or reviewing or reporting on this particular future prospective financial information. Okay, the same applies in the projection based on hypothetical assumptions. Even if there are some hypothetical assumption mentioned about future events, which about any future event which is not necessarily expected to be take place. So if it is hypothetical, that means it is 100%. We do not have much of the guidance. It is based on imagination only. So it is okay as soon as we are not vouching the accuracy and of the projection has been made. Okay, so whatever projection has been made, we are not going to vouch it. So I hope you are able to remember that okay, what is the responsibility of management in preparation and presentation of projected financial information. How they will do? They will do the identification. They will do the what is the basis of it, and we can also provide the assumptions. Okay, can professional accountant be associated with financial information? This can come in both your professional ethics question and in this particular SAE as well. So you have to mention the same that it is being restricted in clause 3, but we can do the review, we can do the preparation, we can do the reporting as far as we are not vouching the accuracy. And even in hypothetical assumptions, we can do that as far as we are not vouching the accuracy of the projection that is being given. Is it two questions clear? This is the important question, I would say. It might come. Okay, clear to all? Okay, great. Now, yes, sure. So, see what I'm saying, what it is asking. Can professional accountant be associated with prospective financial information? Because when we see from the perspective of professional ethics, what professional ethics is saying, professional ethics is saying that chartered accountant will be deemed to guilty of professional misconduct if he associated himself or his firm to be used for the vouching of the accuracy of any kind of forecast, okay, any kind of contingency. Okay, if he vouches anything, he will be guilty of professional misconduct. But the chartered accountant can help in preparation, can help in reviewing, can help in reporting of the of something of forecasting thing as far as he's not vouching the accuracy of the forecast. He's saying that based on my report, it is not certain that this thing actually happens. I'm only providing a report on what sources this data has been prepared. Okay, what all the major assumptions that is being taken and what is the basis of forecast. So in his report, he will only mention that okay, how we have prepared this particular report, okay, or how management has prepared this particular report. What is the basis of this forecast? What is the major assumptions? And we are not vouching. We are not vouching the accuracy of this forecast. Clear, Karthik? So can it is associated? Yes, it can be associated if at all they are not vouching the accuracy. So main wording here is does not vouch the accuracy. If they are vouching the accuracy, then they are guilty. But if they are not vouching the accuracy, then yes, they can do as per SAE 3400. Okay. Now, what is the duty in examination? Now, first of all, the duty for preparation goes with the management. Now, the duty for examination is with the our auditor. So now, how he will do the examination? First of all, he will see that okay, whatever assumptions that is being taken by the management in preparation of prospective financial information are not reasonable, not unreasonable. Okay, so whatever assumptions that is being taken by the management, it must not be unreasonable. Okay, it must be consistent with the purpose of the information. That okay, assumptions are consistent with the purpose of information. Whatever information purpose are there, it is easily be able to serve with the assumptions, and these assumptions are not unreasonable. So first of all, what our auditor need to ascertain that okay, whatever assumptions that is being taken care of by management, these assumptions are not unreasonable. Okay. Now, prospective financial information was properly prepared on the basis of assumptions. Now, the assumptions are not unreasonable. Okay, that means assumptions are reasonable. But it is also possible that okay, assumptions are reasonable, but they have prepared. Okay, they have taken some assumptions. Suppose they have taken the assumption that 5% will be the growth, and auditor has also certain that okay, this is okay. But when they come for the preparation of financial information, they have actually prepared it on the basis of 10% growth. So that means they have not prepared the financial information on the basis of assumptions they are taking. So the second things to examine is that the financial information is properly prepared on the basis of assumptions. Is it clear that okay, it is reasonable and it is also prepared on that particular basis? Right? Clear to all? Okay, great. The prospective financial information is properly presented in all material aspects, adequately disclosed, and clearly instructed whether in best estimate or hypothetical assumption. So mostly See how the financial information, prospective financial information is based. It is normally made out of two things. One is the best estimate, and the other one is hypothetical assumption. So the second thing to examine is the auditor will examine that the prospective financial information is properly presented, and wherever disclosure is required, that okay, this thing is based on best estimate, this thing is based on some hypothetical assumptions. So clear disclosure will be there and proper presentation will be there. So the auditor need to check whether the prospective financial information are properly presented in all material assumptions are adequately disclosed or not, and clear indication is being made that okay, whatever assumptions are there, whether these assumptions are based on best estimate and whether these assumptions are based on hypothetical assumptions. And prospective financial information is prepared on consistent basis with historical financial information using appropriate accounting principle. So suppose that depreciation is being charged in historical financial information on the basis of straight line basis, but in prospective financial information we are changing the basis to WD. Okay, so they have to see that okay, the prospective financial information are also consistent with the basis of accounting principles that is used in the historical financial data. So all these things are what? All these things are the examination that is done by the auditor. So what auditor is examining that okay, the estimates are not unreasonable. They are actually preparing it with that estimates only, right? The proper presentation is there, and there is consistency between the accounting principle. Is it clear, guys? Okay. Now they are again repeating the same thing. Nature of assurance. Now, acceptance of such engagement. Before accepting these kinds of engagement, the auditor need to make sure that okay, what is the intended use of this information? That okay, they are preparing some prospective financial information, but where they will use this thing? Okay, whether they will use this thing in obtaining some loans. Okay, whether they will use it in the internal use only for the some business reason making. So why they are making this prospective financial information, the auditor will get to know its intended use. Then this information, this prospective financial information, whether it is for general or limited distribution, means whether they are wanted to distribute this report or they wanted to use it internally. That means limitation of distribution. They are not going to distribute this thing, or whether they are going to generally distribute this particular uh, prospective financial information. This also needs to be known by the auditor before accepting these kinds of engagement. Now, nature of assumptions, whether these assumptions are based on best estimate and whether these assumptions are based on hypothetical assumptions. Now, elements to be included in information. Now, sometimes the information is only based on a statement of profit and loss account. Sometimes it's only cash flow, sometimes it's only balance sheet, and sometimes it's only related with one or two elements. So, what all elements of prospective financial information will be included, the auditor needs to know about it. Now, what is the period is going to covered in this particular information that is also being known to the auditor before accepting of these kinds of engagements. So, what will be the intended use, its distribution, nature of assumptions, elements that is covered in this prospective financial information, and what is the period to be covered. Is it clear that before acceptance, some of the precautions that is being taken by the auditor? Now, the auditor should not accept or should withdraw from the engagement when the assumptions are clearly unrealistic. Now, from the point of view, if it is given by the auditor, if it is think by the auditor that okay, this assumptions or these things are clearly unrealistic, okay, then in that case, the auditor should not accept this kind of engagement or should withdraw from these kinds of engagement. When auditor believes that prospective financial information is inappropriate for its intended use, means you are preparing something else and the intended use is something else. The auditor should consider the extent to which on reliance on historical financial information is justified. Like other engagement, it is necessary the terms of engagement should be agreed with the clients by sending an engagement letter. So all these things need to be justified by the auditor before accepting of these kinds of engagement. Now, what is the examination procedures? What will be the examination procedures? So first of all, the auditor get the knowledge from the previous engagement. Now suppose the auditor has done some kind of this engagement from this entity. So whatever knowledge he has gained from any previous engagement with this particular entity, he will keep in mind all these things. Now he will keep in mind the management competence in preparation of prospective financial information, whether the management is competent enough to prepare this kind of prospective financial information. There are some kinds of management. I hope you know that there are some kind of management that actually not that much educated, right? Their their accounts department is also not that much competent. So first of all, we will see that okay, what is our past experience with this entity. Then second, whether our management and their accounts department are capable of preparing these kinds of financial information. Then what is the likelihood of misstatement? What is the likelihood of material misstatement based on the understanding and the competence of the entity? Then to the extent it is affected by the management judgment. Uh, how much extent it is affected by the management judgment, prospective financial information. Now, mostly prospective financial information is hugely affected by the management judgment because it is basically based on assumptions only. So, normally it is being affected materially by the management judgment. So, whether it is affected, whether it is acceptable or not. Now, what is the sources of data? Whether the sources of data, its accuracy, its reliability, right? Its underlying data derived from third party, such as industrial statistics, to support the assumptions. Now, there are few. All the financial information is based on some kind of data, right? So, what is the sources of these data? Is the sources reliable, right? It is derived from the industrial average data. It is derived from third party data. So what is the sources? Are they reliable? Are they adequate? These things need to be done by the auditor. Now, stability of entities business, whether the business are stable enough to get these kinds of data, right? Now the engagement team experience, whether we are experienced, right? Whether the engagement team are experienced in order to get the comfort over these prospective financial information. Now suppose the auditor itself do not have much knowledge about these kinds of industry, then he is not that much capable to do these kinds of examination procedure. So he will also see his competences as well, his experience with this kind of business, this kind of industry in which the entity operates. Right. Are you guys able to understand what is the examination process on the previous data, on the competence, then likelihood management judgment, sources of information, stability, and then the experience. Now, by performing all these procedures, we will see that sources and reliability of the evidence supporting that, okay, on the basis of which assumptions they are providing these kinds of evidences, right? Such evidences may be available from variety of sources like entities, budget, data, industry publication, etc. When hypothetical assumptions are used, all significant implications of such assumptions will be taken care into consideration. Okay, what will be the significant implications? Okay, if we doing this hypothetical assumption, how much it implies? Okay, how much it's going to affect? What is the significant implication of the same? For example, if the sales are assumed to be grown beyond the entity's current plant capacity, the prospective financial information will need to include necessary investment, right? Like what it is saying that okay, the sales are assumed to be grown beyond the current plant capacity. So the prospective financial information must include the investment they need to make in the additional plant capacity, the cost of alternative means. So they are doing any hypothetical assumptions, then what is the implication of the same? Assumptions is what? That growth, there is a growth in sales. Now implication is what? They need to make any additional investment. Right. Are you guys able to understand that hypothetical assumptions can be growth in sales, but its implication will be additional additional investment in plants. So whether it is taken care or not, these also things will be taken care of by the auditor. So they need to verify that the assumptions are consistent and interpretation, and there is no reason to believe that they are unrealistic. So all the assumptions must not be unrealistic. Able to get this point? Yes, no? Okay. Now presentation and disclosure. When assessing the presentation and disclosure, the prospective financial information and the underlying assumption, in addition to the specific requirement of relevant statutory as well as relevant professional pronouncement, it needs to be considered whether the presentation is information and not misleading. So whatever presentation you are making, it must be informative. Means it must provide some information. It must not be misleading. Okay, it must provide information that okay how we are getting these assumptions, what is the basis, but it must not be misleading. Whatever accounting policies are being clearly disclosed. Okay, whatever accounting policy that you are following in preparing the prospective financial information must be clearly disclosed. Now assumptions are adequately disclosed. Whatever assumptions that you are making, that also must be adequately disclosed in the notes of prospective financial information. So where you need to disclose the assumptions in the notes of prospective financial information. It needs to be clear whether assumptions are on the management based estimate or hypothetical. And when assumptions are made in areas where are material and subject to a high degree of uncertainty, the uncertainty is relatively sensitive to the result need to be adequately disclosed. So all the things must be adequately disclosed. Okay, so assumptions need to be adequately disclosed, and whether these assumptions where it is should be disclosed in the notes, and whether it is from the management best estimate, whether it is from the hypothetical. This things also needs to be adequately disclosed. Now, dates at which prospective financial information is being prepared needs to be disclosed. That okay, which date we are preparing this prospective financial information, that also needs to be disclosed. The management needs to be confirm the assumptions and appropriateness of the dates, even the underlying information may have been accumulated over a period of time. Basis of established point, the basis of established means okay what is the basis of these assumptions, what is the basis of these established points in a range clearly indicate the range is not selected is a biasness or misleading manner when results are shown in perspective financial information are expressed in terms of range. Means okay we are selecting this particular range but the range is not based on some kind of biasness or some kind of misleading manner. So what is the basis of this established point, so we need to mention in the presentation, right? We are learning the presentation and disclosure. So the presentation in such a manner it is not misleading. Okay, it must be informative. Accounting policy needs to be clearly disclosed. Assumptions need to be clearly disclosed. Date must be based on the prospective financial information. Okay, on which date we are preparing this kind of prospective financial information. What is the basis of these established points? And if there is any changes in the accounting policies from the most recent financial information, the example that I have given you on the basis of straight down straight line method and WDV. So if there is any changes in the accounting policies from the most recent historical financial information, what is the reason of the changes and what is the effect of such changes in the prospective financial information needs to be adequately disclosed. So what all disclosures presentation needs to be done in prospective financial information, all these things are here. Are you guys able to understand? It might come in the question. E point. Okay. So see what it is saying. The basis of established point in a range is clearly indicated. That range is not selected. So see, we are giving what? We are giving a basis for established point in a range. In a range means what? That okay, we are giving some kind of basis for this kind of assumptions. Okay, that okay, we are giving 5% growth. So it is based on some kind of range. Range may be from 2029 to 20. We are going the growth of 5% only. So it is based on these kinds of range, right? So the basis of established point, established assumption is based on this range, and we have to clearly indicate that this range, the range we have selected 2009 to 2019, is not selected on biased nature, is not selected in any misleading manner, right? Are you guys able to understand now, Karthik? That okay, if something we are establishing in any point due to some kind of range, then we have to make sure that this range is not selected due to any biasness, due to any misleading manner. And this we have to show clearly, and we have to express this thing that okay, this range is not selected due to any biasness or due to any misleading manner. So all these disclosure and presentation we need to keep in mind whenever we are preparing any uh, prospective financial information, because it might be possible that chartered accountants are not only engaged into reviewing of the same, in not only expressing opinion in the same, but they are also might be there in preparation of the same. And even if you are doing only examination of the same, then also you need to find out that okay, whether proper disclosures are there or not. Now we are doing the reporting of the same. So reporting title, addressee, and we are identifying that we are doing the examination over prospective financial information. Then we are referring the particular standards that okay, on which basis we are doing this examination. Then okay, what is the responsibility of the management and the underlying assumptions. Then okay, we are having some restriction over the distribution of this prospective financial information. Then okay, what is the examination procedures that we are following, whether it is on test basis, what is the assumptions on which the forecast has been made. Then if we are doing any negative assurance, if we are not providing any reasonable assurance, then we have to give a statement of negative assurance as to whether the assumptions provide a reasonable basis of assurance that okay, we are not able to give any assurance, we are not providing any assurance. We have to mention this thing that this is not a vouching of prospective financial information, right? We need to specifically mention this thing. Then at last we have to provide our opinion that okay, whether the prospective financial information is properly prepared on the assumptions and whether these assumptions um, not unreasonable, right? Then appropriate comments, the achievability of results, that we are not providing any kind of assurance that there will be achievability of these kinds of results. Okay, even if it is mentioned in the prospective financial information, we are only examining that okay, whether it is prepared as per financial reporting framework and the assumptions, the underlying assumptions, the judgment, etc., are correct or not. But we are not providing any assurance over the achievability of these kinds of results. And at last, date, place, and signature we need to mention in the reporting. Is it clear, guys? That okay, we are providing title, then identification, then essay, then responsibility. Then there is a restriction in distribution. Then what examination processes. We are not providing any assurance. Then opinion. Then achievability of result is not clear. Then date, place, and signature. The report shall provide. The report would state that examination of evidences supporting do not provide any reasonable basis of for prospective financial information. Express an opinion as to whether prospective financial information is properly prepared on the assumptions and presented in accordance with relevant financial reporting framework. That okay, whatever financial information, prospective financial information, it is prepared as per applicable FRA, and we have to mention that there is no assurance that this result is actually being achieved, right? In case of projection, the prospective financial information has to be prepared using a set of assumptions and hypothetical assumptions about future events, etc. It is not necessary that it will be occurred. Suppose we are providing in financial information that we have got this loan, but in future it might be possible that we are not able to get this loan, or we are not able to do this additional investment. So only providing these kinds of assurance or these kinds of examination does not necessarily mean that all these things are necessary to occur, right? And consequently, the reader Question that prospective financial information should not be used for the purpose other than the above mentioned intended use. So whatever intended use is there, do not use anything apart from that. Then where one is believed one or more significant assumption do not provide any reasonable basis for preparation of best estimate, uh, and wherever the assumptions etc. Are unreasonable, are not provided on reasonable basis, means they are unreasonable, then you have to what, you have to either express the same and you need to withdraw the engagement because the assumptions, the underlying assumptions are not reasonable. That okay, if there is any condition that affects the or it's provide any limitations over the working, then you need to see that report on prospective financial information, you need to consider the same that okay, there is some limitation over your scope of working, then accordingly you need to report the same. Then methods which are important, you need to document the same in the documentation. Is it clear, guys? It is like kind of simple, but simple essay, but it has keep much time because I need to explain to you that what it is about. Let us revise it like okay, what is the responsibility for preparation and presentation with the management? Then can professional accountant be added as a someone who can associated with the respective financial information, that what is the duty for examination, then before accepting we need to check what intended it is, etc. Then what is the examination process we need to apply, then related with presentation and disclosure, and at last reporting. Then reporting must include that this is not an assurance, and if there is any unreasonableness, we need to withdraw with this kind of engagement. And at last, documentation. Now let us see test of understanding question. A company has approached to CA Hemant for assurance report in respect of prospective financial information on a project. On going through project detail, it is noticed that depreciation reflected on proposed fixed asset is acquired in prospective financial information has been calculated in accordance with provision of income tax. That means in prospective financial information, they have calculated depreciation based on the provision of income taxes and not as per applicable FR. No disclosure has been made in respect of these two. Now there is changes in accounting policy and there is no disclosure in the prospective financial information. How the matter should be proceed with? Now as a auditor, how you will proceed with this kind of matter? Please tell me. How will you proceed with this? Whether it is okay, whether you will give unmodified opinion, yes, no. Tell the reason and the changes. You need to make sure that the reasons are there that why you are changing these things, and you need to disclose the same, right? The disclosure will be must be there. Azim, how ICM has given the answer. That such type of engagement, it is the duty of professional accountants to see this prospective financial information is based on consistent basis as per historical financial information. Appropriate accounting principles are being followed in consistent manner. In case the company has done in depreciation as per income taxes, therefore it is not proper. Therefore, they have not prepared in a proper manner. In fact, the projection has been prepared in consistent basis and using appropriate accounting policy need to be stated. Further, presentation and disclosure are not adequate. The point we have learned here is the presentation and disclosure is not adequate. A qualified and the adverse opinion needs to be given and withdrawn from the engagement as appropriate. So, we do not need to mention what auditor or what management need to do. We need to mention what auditor need to do. Right. So, in the particular SAE, he needs to mention that okay, this thing needs to be mentioned in consistent manner. As it is not mentioned in the consistent manner, therefore the preparation is not proper, right? Therefore the presentation and disclosure is not adequate, and hence we are giving a qualified or an adverse opinion, or in many cases we can also think about the withdrawal from the engagement. Is it clear? Okay, great. Now we'll start further with SAE 402 related to assurance report on control of service organization. Something we have already learned in SAE 40. Now SAE applies only when service organization is responsible or otherwise be able to make assertion over suitable design or control. It does not deal with assurance engagement. Now you all know what do you mean by service organization. Now what we are making in this thing, the auditor is giving report whether the control RB is operated at this click, that okay, whether what all controls that we have mentioned, that okay, we are following this control, that control in our service organization, whether these controls are operating as it is described, and report only on those controls at service organization other than those related to the relevant user entity internal control. So we are only reporting on these cases. We are only reporting on those controls that are relevant for the user's entity and not all the controls, right? So we are only reporting on these controls that are relevant for the user entity. What is service organization? We already know the third party organization that provides any services to the user entity. Why controls of service organization are important to user entity internal control related to financial reporting. Now you tell me why these controls are necessary for user entity. Why service organization control is necessary for user entity. Why some third party control is necessary for the user entity. Because actually they are using their services, right? They are outsourcing their services, right? So that is why it is important the controls related to service organization may be relevant for the user entity. Such controls may pertain to assertion about presentation disclosures, account balances, etc. That is applying towards the user entity, because we are using the services of service organization. That is, it is important for our work as well. That okay, they are having some controls, etc. Right. So controls at service organization included aspects of user entity information system. They might have control over the information system as well. That okay, how they will able to process the payment until and unless they have some data from the user entity. So they might also have the data from user entity, the access of information system of user entity as well. So that is why it is important for them to have the 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 control must be checked, right? For example, such control at service organization may include aspects of service organization control, environment monitoring control activities which can relate to service provided. So because they are providing us some services, that is why it is important for us to check it. Now user auditor, service auditor, you already know user auditor is the auditor of the user entity and the service auditor is the auditor of the service organization. Now what is the objective of service auditor? What is the objective of service auditor? To obtain the reasonable assurance that the description is fairly presented. That okay, whatever description we are giving of a control, it is fairly presented and it is designed and implemented throughout a specific period. That okay, whatever controls we are providing, the controls are clearly described and it is actually designed and actually implemented. Okay, to provide the reasonable assurance over the same. And the control objective description are designed throughout the period. That okay, whatever controls that we are providing, controls objective that we are providing in the service organization are suitably designed throughout the period. And where included scope of engagement, the control operated effectively. The controls that we are mentioning are actually operating effectively, and we are also providing reasonable assurance the control objective. That okay, whatever control we are described, whatever control is being implemented throughout the period, are the same operating effectively as well. And after providing reasonable assurance, we are also doing the reporting of the same, reporting of the matters given under A by the service auditor. All these things are done by whom? All these things are done by the service auditor. He's the only one who is saying that okay, because he is auditing what? He is auditing service organization. That is why he is able to get the reasonable assurance that whether the control are adequately described, whether the control are adequately implemented, whether the control are adequately designed throughout the period, whether the control are operating effectively, and at last he is providing what? He is providing report on the matter. Able to understand this part? Okay. Now, type 1, type 2 report, we have already mentioned this type 1, type 2 report now SA 402 as well, but now we are also again repeat the same thing. There are two types of report that is being provided by the service auditor. One is type 1, other one is type 2. In type 1, first of all, they will provide description of the system. In type 2 as well, they will provide a description of the system. Now they will do the return assertion. Return assertion, what they are doing, that okay, whatever control are fairly described. Okay, at a specific date. So in they are providing that okay, there is fair description at a particular date. But in type 2, the description are fairly presented throughout the specific period. So suppose in type 1 report, they are only checking on 31st March. But in type 2 reporting, they are providing that okay, it is fairly presented throughout the period. Throughout 1st April to 31st March, it is fairly presented. Then it is suitably designed at a specific date and it is suitably designed throughout the period. So what is the main difference in type 1 and type 2 report is the type 1 report is at a particular date, but type 2 report is throughout the period. And at last, the service auditor is providing the report. But in type 2 report, they are also providing that whatever controls are there, what is the description, whether it is operating effectively or not. So whether they are operating effectively or not, this only mentioned in type 2 report and not in type 1 report. That they are only providing that okay, they are mentioned the description, they are there, but whether they are operating effectively or not, only this thing is mentioned in type 2 report. Then at last, in type 2 report, also there is a reasonable assurance. Reasonable assurance on matter that is stated before and include a description of test of control. That okay, what all tests we have performed in giving that reasonable assurance. So type 1 report is a report on description and design, and type 2 report in description, design, and operating effectiveness of a service organization. So one difference is what? The operating effectiveness is only in type 2 report, and one of the difference in type 2 report also that it is throughout the period. And third difference is they also provide a description of test of control. That okay, what test you are performing as a service organization auditor for providing reasonable assurance. Is it clear? Type 1, type 2 report. What is the objective? Through objective only, we are preparing these kinds of reports. Right? Otherwise, you able to understand the connectivity between the objective and the reporting. From report, you can make the points of objectivity, and from the objectives, you can also make a report on the reporting items. Yes, no, is it clear? Are you able to find the connected points? That okay, it is clearly presented, it is designed, and then it is operating effectively. Right? Okay, great. So now, how engagement team will be proceeding with it? First of all, compliance with ethical requirements, whether the audience the ethical requirement. Then determination of management in those charged with the governance that okay, what things we need to communicate with the management and those charged with the governance, and who is the appropriate person for the same. Then if there is any changes in the term of engagement, so before accepting, we also need to see that whether there is any change in criteria, okay, whether there is change with terms and conditions with the service organization. Okay, then if there is any change, then suitability of these criteria, whether controls are suitably designed in case type to report whether they are operating effectively or not. Then at last we will do determination of materiality, because materiality is very very important in our auditing thing. Then we will obtain understanding of service organization system. Then, okay, before starting audit, we will obtain the understanding. Then we will obtain the evidences. Then obtain evidences regarding designing of the control, about obtain evidences regarding description, then obtain evidences regarding designing of control, then obtain evidences regarding operating effectiveness. These three points are again and again repeating, that okay, it is clearly described, it is designed appropriately, and then third is operating effectively. So for all these 3 points, we are what we are getting evidences. Then we will understand the internal audit function. Now, we will also understand that how internal audit is functioning, because at last what we are doing the controls test. Normally, control test is already being done by internal auditor, right? So, how we will able to what is the nature of work of internal auditor, and how they have performed the things. All these things we will also understand that okay, what is already being done by the internal auditor. Then we will ask for a written representation. What written representation we will ask? We will affirm that assertion accompanied the description of the system. That okay, whatever assertions are there, they are as per the description. Then we will also see that service auditor is able to get all the access. Okay, the service auditor will get all the access, and then uh, a disclosure will be there. A written representation disclosure will be there with the management. Management will disclose they will disclose that there is no non-compliance. If there is any non-compliances, he must tell the auditor. If there is any non-compliances with laws and regulation, fraud, uncorrected deviations, etc., within the organization, then disclosure must be there. Okay, disclosure must be there with the auditor. The written representation is being taken by the management, that the management has disclosed all the non-compliances. The management has disclosed all the design deficiencies in the control. The management has disclosed the instances where controls are not operating as described. The management has disclosed any event subsequent to the period in which service organization description has been covered, which it impact the service reporting. So whether the management has done the adequate disclosure, the management has provided the access, and it is as per the description, underlying description, all these things, written representation must be taken by the service auditor. Able to understand this point? And subsequent event is as well, he needs to understand. And at last, he will do the reporting. Title, addressee, things. Then identification. In the identification, what is the identification? That okay, what is the description of the system? He will provide the description of the system. He will also see that description refers to the complementary user entity, that okay, he has not evaluated the things, they are only evaluating the things that are relevant for the user entity, right? And but the working of other controls as well is based on the it also it also depends upon other uh, controls as well that are not tested by me. You can read it out for further detail. I would say, if service are performed by the sub-service organization, the nature of activities performed. So, what all nature of activities are being performed, all the identification will be done by the service auditor in the reporting. Then identification of criteria and party specifying the control objective. Then the statement that a report is in case of type 2 report, the description of test, that okay, what all test he has performed. If he is doing type 2 reporting, he will also need to include that okay, what all controls that he has tested. The statement that service organization is responsible, that okay, the service organization, what all for service organization is responsible, basically management or service organization. Preparation, providing services that is covered, stating control objective, and design and implementation is the responsibility of service organization. Then thereafter, what is the responsibility of service organization auditor? That to get a express an opinion over the services control description and whether type 2 reporting, he is also responsible for providing opinion over operating effectiveness. So, okay, so what is the responsibility of service organization and what is the responsibility of service auditor? Then he will make a statement that okay, it is based on SAE, summary of audit procedures, that okay, what else procedures that he has performed. A type 1 report a statement that he is not performing any services, that okay, if he is providing only type 1 report, then he also need to mention that he has not performed any services, anything related to operating effectiveness. Okay, and no opinion is expressed thereon. If he is providing only type 1 report, then he needs to specifically mention that he is not he has not done any procedure related with the operating effectiveness. Then if he has done any limitation has been done, then he also need to express the same. Then at last he needs to make a opinion that whether the description is there, the suitability design is there, and the operating effectiveness is there or not in type 2 report and in type 1 report accordingly. Then date, signature and place. So the reporting is kind of similar only. The first thing is title, then addressee, then identification of criteria, etc. Then management responsibility, audience responsibility. Then it is based on particular essay. Then some other things that it is not an opinion, etc. Any limitations, etc. Then he will express an opinion and afterwards date, signature and place. Able to understand the reporting? More understanding you will get once you will able to read these points. Okay, some additional matters also be there. In case of type 2 report, the service assurance report in a separate section after the opinion and attachment of description of control. Okay, after the opinion, if he is providing type 2 report, he will also do that. Okay, what all test he has performed and what is the results. Okay, of these tests, he will describe that okay, what all tests he has performed and if any deviations, etc. Okay, the service auditor shall report deviations if any has concluded any an objective has been achieved, that okay, whether the control objective is achieved or not, he will also provide even if there is any deviation. Now, if he needs to modify his opinion, in what all cases the service auditor will modify his opinion? When the description are not fairly presented, when the control objective are not as per description, when the controls are not operating effectively, right? And the foremost case that he is not unable to obtain any sufficient and appropriate audit evidences, in that case he will modify the opinion. The three cases that we are reading till now, in the fourth case he is not able to obtain sufficient and appropriate audit evidences. In that case, the service auditor can modify his opinion. And then at last, documentation. Documentation he will do nature, time and extent, results of procedure performed, and any other significant matters that is done in the audit. What is the conclusion reached? What is the professional judgment based on these kind of conclusion? So all these documentation will be there. Able to understand SAE 3402. Yes, others. You will get more understanding of it once you are able to read it out. And mostly we have learned this thing in essay 402 only. So it will be easier for you. So let us see the test your understanding question. Bansi Group, a leader institution running a prestigious postgraduate courses in the field of management. Its financial statements are audited by the independent auditor before starting the academic session. The board of the institution has outsourced his entire process of inviting students, application submission, and collection of applicable fees, etc. less fees by the Easy Solution Limited. The auditor of Bansi Group wanted to sure that design and operating effectiveness over the control of Easy Solution Limited. what should be the nature of code provided by the auditor of easy solution limited specifically used for Bansi Group by its auditor in terms of SA 3402. So please tell me what kind of report should be there. What kind of nature of report for design and operating effectiveness? Type 2 report will be there. Now let us move forward towards our next SAE. It is on SA 420 over the pro forma financial information included in the prospectus. As I told you that pro forma means we are including something that is not yet happened. 2420 deals with the reasonable assurance in engagement undertaken to practitioner to report on reasonable party violation or pro forma financial information included in the prospectus. Now, what do you mean by pro forma financial information? It refers to financial information shown together with the adjustment of illustration impact on events or transaction or unadjusted financial information as to event that had occurred in the transaction that have been earlier to the date of selection. Means that particular event or transaction has not been occurred and it's going to be in a earlier date. This kind of pro forma can be in a statement of profit and loss, balance sheet or notes. Okay. Assumptions that is used to prepare pro forma financial information and adjustments made. So they are providing some adjusted pro forma financial information based on some kind of events or occurrence that has not been done yet. So what is the objective? Objective is to get a reasonable assurance and then to reporting on the same. Objective is almost same for all the SAEs. Now, who is responsible for compilation? Here, we will say management as a responsible party. Okay, so responsible party is going to be responsible for the compilation of pro forma financial information. How they will do? First of all, they will identify the sources. Okay, then they will make pro forma adjustment that okay, suppose they are the statement of profit and loss without adjustment. So this is a source, and then they will do the pro forma adjustments into it. And at last, they will present the resultant pro forma financial information accompanied the disclosure. So whatever disclosure is being required, they will accompany the same. Now, what is the nature of practitioner responsibility? Here, the chartered accountant is saying as practitioner. So, the management is being called as responsible party, and the CA or the person who is providing assurance over it is providing as practitioner. Okay. So practitioner has no responsibility to compile the pro forma financial information. The responsibility rests with the responsible party. The practitioner's sole responsibility is to report whether the pro forma financial information has been compiled in all material aspects on the basis of applied criteria. It is a reasonable assurance engagement to report on compilation of pro forma financial information involving performing and procedure to assess whether the applicable criteria is used by the responsible party in compilation of pro forma provided a reasonable basis of presenting and significant effects directly attributed to the event and transaction. So what is the responsibility of practitioner? The practitioner responsibility is only to provide a reasonable assurance. Okay. So what is the step that is being involved? As we have learned till now, first of all, engagement acceptance will be there, then planning will be there, then obtaining written representation, at last forming of opinion, and then reporting on the same. Able to understand till here? Then we will do the step-by-step process. Others? Okay, great. Now, engagement acceptance. First of all, they will do the acceptance. Before accepting these kinds of engagement, they will see that practitioner have the capacity and competency to perform these kinds of engagement. That whether the practitioner himself have the capacity and the competence to perform these kinds of engagement. Then, on the basis of preliminary knowledge, the engagement circumstance and discussion with the responsible party to determine the applicable criteria are suitable. So they will see that whether the applicable criteria is suitable enough or not. Now, what is this applicable criteria? Applicable criteria are the events and the assumptions that we, on the basis of which we are providing this, we are making this kinds of pro rata financial information. Okay, whether this applicable criteria is misleading. Okay, so we need to make sure before accepting this thing that applicable criteria is not misleading. Okay, then evaluate the wording of opinion. That okay, what kind of opinion we can express in the relevant laws and regulation. Determine the practitioner is likely to able to express an opinion, that whether he is able to express an opinion or not. It might be possible in some of the laws and regulation. It is not there that he can express an opinion, like we have done now. That if it is related with the future events, right? So we cannot express an opinion. So whether as per laws and regulation, whether the practitioner are able to provide a reasonable assurance or not. So what are the sources on which these kinds of conclusion is being reached, and the modification of opinion, if the modification of opinion will be there. Okay, see, it might be possible that these pro rata is based on some kind of sources that are not audited, or if it is audited, then the audited financial information, there is modification of opinion. Okay, so if there is any modification of opinion, we need to make sure, we need to mention it in the emphasis on matter time. That okay, suppose we are making this pro information, financial information based on the financial information on which audit report is there, but audit report mention modified opinion or disclaimer of opinion or adverse opinion. So when we are making, what is the source? Source is basically modified opinion. So we need to make sure we mention in the emphasis on matter para that sources are modified opinion thereon, or whether the historical financial data are audited or not. We also need to make sure that whether this historical financial data are being audited or reviewed or not. Then if there is any acquisition, okay, it might be possible that why we are providing this pro rata information, because there is any acquisition, there is any merger. So whether we have access to acquiry financial information, right? Whether we have understanding of acquiry data, or whether this acquiry financial information is audited or not, right? Then we will get the agreement with the responsible party, that okay, the responsible party who will be intended user, that okay, you are providing this prospectus, you will include in this prospectus who will be the intended user, who will be the complying, who will be compiling this pro forma financial information, and you will provide the practitioner with what? You are providing the practitioner all information, right? Additional information and access to all within the entity whosoever required while performing these kinds of engagement. Able to understand this? Okay. Before accepting, he will see his own capability, he will see the knowledge, he will see whether he is able to express an opinion or not, what is the sources, whether the source is audited or not, if it is based on any acquisition, so we are gathering the data or financial data and understanding of acquiry, and then agreement with the management that okay, who will be the intended user, who will be compiling, and the practitioner will be is going to be provided with all information, additional information, and those within the entity, access to those within the entity whosoever required, and if we needed any access due to business combination, because it might be possible that in pro forma there is some mergers, acquisition, so we will also be able to get the access of any business combination data. Then we will do the planning. After planning, we will obtain written representation, opinion, and then reporting. After reporting, we will do the documentation. So, planning and performing, we will assess the applicable criteria. That okay, what is the applicable criteria? We will determine the materiality. We will understand who is responsible party for compilation. What is the sources of this compilation? If there is any no audit of the unadjusted financial information, the practitioner shall need to perform other procedures, right? If the historical financial data is not audited and he needs to provide assurance over the pro rata financial information, then the auditor also need to perform procedures over unadjusted financial information as well. Then practitioner shall determine whether the responsible party has appropriately extracted the financial information from the sources. So it might be possible now that they have not properly extracted. There is a case of balance forward, right? They have not forwarded or extracted particular things, or they have disallowed certain things. So proper extraction must be there. Then he needs to obtain evidences regarding events and transactions about financial reporting, that okay, whether they are including. So either they are including any events and transaction, or either they are including any applicable FRF that will applicable in any future date. Okay, so they need to gather the appropriateness of these pro forma adjustments. There can be only two types of adjustments: one which is related with events and transaction, and the other one related with the financial reporting framework. Then they will evaluate the presentation, identify the material inconsistency if any. Then he will obtain the written representation that okay, all the information are being identified appropriately, and the appropriateness of the pro forma, and then the basis of application criteria, that okay, on which the base pro forma financial information has been complied, it is based on the applicable criteria only. These kinds of written representation taken by the management. Is it clear, guys? That okay, how it is very simple with the highlighted points. That okay, we will plan and perform the engagement. We will obtain the written representation. Okay. Then we can have two types of opinion. One is unmodified opinion if it is complied by the applicable criteria, right? And then there can be modified opinion as well, that okay, where laws and regulation says that okay, you cannot do these things, or whether it is compiled on the basis of applicable criteria, concluded a modified opinion, and there is not appropriate in accordance with the framework of assurance engagement. So he can also withdraw the engagement, or they can also seek legal advice, that okay, where laws and regulations are not saying this thing, then he can obtain the legal advices. Where laws and regulation may not regulate the publication of the prospectus. So it might be possible that laws and regulation is saying that, saying what, that these kinds of data is not being included in the prospectus, because there might be laws and regulations that okay, these kinds of data that is not there, that is related with future, that is related to the particular event and transaction, must not be included in the prospectus. So in that case, on the basis of applicable criteria, the practitioner determined to modify his opinion. So in that case, he needs to modify his opinion. Then emphasis on matter para. In some circumstances, the practitioner may consider it necessary to draw attention towards the users. Okay, it may be possible that he needs to draw attention because of the user's understanding. In some circumstances, the practitioner shall include this thing in emphasis on matter para. Such para refers only for the information presented and disclosed in the financial information. You already know this thing, right? The emphasis on matter para, only those things are included in this that are important for user understanding and that are included in the financial information, right? And those are not included in the financial information will be presented in other matter para. Right? Able to remember this point, right? We have covered this thing when we have done emphasis on matter para. Now I would say just read this reporting. Is almost similar. I have highlighted few of the points and I will provide you this PDF. So if you have any difficulty, you can refer these highlighted points. I would say once read this kind of reporting, so you will also get the idea. And then documentation as needed. Now we can do this test of understanding. Then the management of S Limited requested you to accept an engagement to report on compilation of pro forma financial information to be included in the prospectus. In the light of this SE, what factors will you consider regarding the company acknowledgement and understanding its responsibility in before accepting the engagement? So you need to mention all the factors of company acknowledgement, means company responsibility, the management responsibility, right? The responsibility, you tell me, whose responsibility will you mention? Auditor's responsibility or the responsible party responsibility? Which responsibility will you mention in this particular question? Before accepting, entity's responsibility, and also we need to mention that before accepting this particular engagement, what all we needs to do. Okay. So before accepting the engagement, what all para is there and what factors are there for management responsibility, we need to mention here. Okay. So I would say you to read this particular chapter. This chapter is quite straightforward, quite simple. Once you only need to read it out. Okay. So we will have tomorrow class as well. Or you tell me, do we have live class tomorrow? Or I will provide you recorded with chapter 10. Because chapter 10 as well is quite straightforward like chapter 11 only. Only some I will provide you a direction and most of things you will be able to understand by reading. Live, live, live. Okay, okay, no issue. So tomorrow 8 p.m. I will provide you a live class for chapter 10 as well, and most probably be able to finish chapter 10 as well. Today the chapter will be stretched because I wanted to get you the understanding of the essays because these are not new as well, but these are quite simple. Okay, so good night and Someshwar. Yeah, once do the reading. No, I'm almost sure that you will be able to understand the part. If you're not able to understand any part, just reach out to me because I don't feel like there's anything needs to be understood in these points. Okay, they are quite explained. But if you face any difficulty, please reach out to me and I will always assist you. And Someshwar, please send me what all details you will need. Okay, I'll provide you that. Perspective, huh? प्रो फॉर्मा फाइनेंशियल इन्फॉर्मेशन का सपोज करो कि हमने कोई मर्जर एक्विजिशन करा है तो हम क्या कर रहे हैं हमने आने वाले टाइम में हमने पूरा अग्रीमेंट वगैरह सब कुछ कर लिया है उनके साथ में और अब आने वाले टाइम में हमारा उनके साथ मर्जर होने वाला है ठीक है अच्छा पूरा अग्रीमेंट वगैरह हो गया तो हम प्रोस्पेक्टिस के अंदर हम मेंशन कर सकते हैं दैट ओके बिफोर मर्जर दिस इज आवर फाइनेंशियल स्टेटमेंट एंड आफ्टर मर्जर दिस विल बी आवर फाइनेंशियल स्टेटमेंट ठीक है लेकिन ये इवेंट है एक तरीके का एक्विजिशन है जो कि लेकिन अभी हुआ नहीं है लेकिन ऑलमोस्ट सर्टेन है ओके ये तो एक हो गया कि कोई इवेंट हुआ है ट्रांजेक्शन हुआ है और दूसरा हो सकता है कि कोई इन डेज सपोज आपके ऊपर एप्लीकेबल हो रहा है कोई फाइनेंशियल रिपोर्टिंग आपके ऊपर एप्लीकेबल हो रही है तो बिफोर दिस फाइनेंशियल रिपोर्टिंग एंड आफ्टर दिस फाइनेंशियल रिपोर्टिंग व्हाट विल बी द चेंजेस these kinds of are pro forma financial information that can be included in the prospectus to show the differences ओके कि अभी प्रेजेंट केस क्या है और फ्यूचर में केस क्या हो सकता है ओके हाँ देखो यहाँ पे नेम के मेंशन है assurance on engagement to report compliance of pro forma financial information included in the prospectus okay हाँ responsible party means entity okay okay sure okay guys good night